for the 13th of February 2020. Coronavirus developments continue to make the major headlines. Yesterday saw a market willing to shrug off the potentially negative connotations for the global economy. Standard & Poor's, for example, warned of the potential effect on the Australian economy, but bar a brief move lower in Aussie, only to be later reversed. There seemed little concern among traders. Even the RBNZ, in their prior day monetary policy statement, suggested there would be no interest rate cuts this year. Yet New Zealand's largest trading partners are Australia and China. Are we downplaying the potential economic consequences of this virus? Today we see a very dramatic increase in the number of known cases as well as deaths from the coronavirus. Much of this stemmed from the Hubei province of China and was due to a broader diagnostic definition. Still, the numbers are alarming. The broad effect of this will be for equity markets in Asia and Europe to end their respective days in negative territory. US equity futures pointed to a similar fate for the Dow Jones, S&P and NASDAQ. And then the FX world, dollar yen, decided it still didn't like life above 110, especially after the dramatic increase in coronavirus cases. Aussie had the brief drop from 67.35 to 67.05 on the back of those S&P comments. And Eurodollar continued to build on yesterday's break of key support at 108.80 to a low of 108.34. Sterling, as usual, would be the interesting one. Today was the day for Boris Johnson to reshuffle his cabinet, and while the PM appeared to have no intention of firing the Chancellor of the Exchequer, that was apparently dependent on the Chancellor of the Exchequer firing all his closest advisors. The Chancellor was having none of that and promptly resigned, a matter of integrity. And here we get some classic divergence. Sterling appeared to welcome the news, running rapidly from 129.60 to a high of 130.69. The FTSE 100, however, was less happy, closing the day down over 1%. US equities would shrug off some of their earlier losses, with the Nasdaq turning positive on the day as Europe went home. The US afternoon, however, as being the case recently, drifted into a slumber, with FX barely registering a pulse and even equity markets barely moving. Eurodollar closed at 108.40, just off its low of the day, and looking precarious. Dollar yen would end at 109.80. and sterling at 130.40. The Dow Jones will close down 128 points in the end, while the S&P and NASDAQ would both end lower by less than 0.2%. Turning now to the technical bits, and I'm going to look at the Australian dollar today for a little technical view. As you can see from the hourly chart, Aussie has been trending lower since the beginning of the year. Part of that is due to general US dollar strength, and then we have factors such as the economic impact of the wildfires, and now, of course, the coronavirus. Over the past week, though, we can see that Aussie has tried to make a rebound of multi-year lows, which gives us this interesting chart pattern. I guess you could refer it to a wedge or a flag of sorts. It would, however, suggest that a sharp break is on the cards. Which way, of course, remains to be seen. And there are various ways to play it, but definitely worth keeping an eye on over the next couple of sessions. And with that, I hope everyone had a good day, and look forward to speaking to you tomorrow. One more day of the week to go.